L1 Capital manages 5 investment strategies, everything from a UK residential property fund through to a long-short fund. It works on behalf of large superannuation funds, high net worth individuals, retail investors, and future generation. So welcome to Raphael Lamm, Joint MD and CIO of L1 Capital. Raphael, welcome to Ausbiz. Thank you.
Thanks, Nadine. Happy to be here.
Maybe we'll start with the future gen stuff. So
Sure.
how'd you get involved?
I think it was through Jeff Wilson originally. I think we sort of got to know each other through the industry over the years, and we were delighted when we were approached to be one of the funds involved in the vehicle. I think it's a great opportunity for us to participate.
Yeah, and it's really focused on youth mental health now. You've been working with Future Generation for quite some time. So do people within the organization, L1 Capital, see value in it?
I think a lot of the people in the organisation have the same perspective that Mark and I have, which is we all want to do more stuff. We all think that business guys and finance guys have to contribute more to the community. The problem is we're all flat out at work and private lives, and a lot of us sort of can't contribute as much as we'd like to do, and sort of where there's an opportunity, we're really delighted to jump on board. And so this is a great one where we can do what we're doing anyway and make a contribution that doesn't require additional board responsibilities or external responsibilities. It's part of our normal daily routine, and it's great for Mark and myself, and the team really like to be involved in these sort of things.
So then tell us, just briefly, what is it that you do every day? Like, get us across your overall sort of holistic investment strategy.
Sure. So the day starts off in almost all days by checking out what happened overnight in the US, all the company news that comes through, either through the ASX or through the newspapers, being on top of what's happening, both in terms of finance and generally on top of the world. That's the start of the day. The rest of the day is very much pre-organised, so it's about generally lots of company meetings with management, or suppliers, customers, competitors, anyone that gives us an insight into the companies that we're invested in or considering investing in. So it's really back-to-back meetings and preparations for those meetings.
Now, correct me if I'm wrong, you invest in Australian companies as well as global companies.
Yeah, we do. We're predominantly Australia, so it's about, for the long-short fund, it's about 70% Australia, 30% offshore.
The world seems like a rapidly changing place right now. We've got geopolitical risks in many parts of the world. We have an incoming US president that has a policy agenda that has the potential to really change things around the world. Is it a difficult time to be an investor?
I think it is, but I think it's always difficult, just for different reasons. I think at the moment the world was getting used to a fairly stable environment, at least from an investment market perspective. Earnings growth was fairly stable, global GDP growth was low but stable, valuations were pretty stable also, and so I think everyone had been lulled to a certain degree into a sense of complacency, even though there were like wars going on and everything else. From an investor perspective, things were quite stable for quite a period of time, and then you get like a major change with Trump and the Republicans coming in and controlling all arms of government. That's a big change, and I think it's one that the market's just trying to digest at the moment, and I think it has the potential to create more volatility and more challenges. As we see here today, it's a bit early to determine if there will indeed be a big change.
Opportunities, no doubt, as well. But when you look around the world, if I focus in on US equity valuations as opposed to equity valuations in Europe and emerging markets in Australia, I mean, where do you see the most favourable opportunities?
I think for us, the best opportunities are not necessarily by region, but they're company specific. In general, we would say that US companies are somewhat overvalued. However, in many cases, they're in a stronger position than they've ever been. And so often investors look at a price to earnings multiple, but that may overstate things in terms of the market being more elevated than usual, because the free cash flow yields are higher than they've traditionally been. And so the cash flow conversion for a lot of the big US companies is very strong compared to history. And so we'd say companies are expensive versus history, but only moderately or modestly expensive versus history. That's for the market as a whole, and that's dominated by some of the larger companies that are relatively expensive. when you look outside the leading names, in general valuations are about normal. And when you look at cyclical companies, smaller companies, in general, the value universe we'd say is cheap versus history. And we're seeing lots of fantastic opportunities in that value space. It can be in the US, but even more so in the UK, for example, other parts of Europe and Australia.
Mm-hmm. And in Australia, do you think it's going to be a bit of a tough market for a while? Generally, I mean, we're talking because of our heavy weighting towards banks and materials and our lack of real depth, say, in the tech space.
Traditionally, L1 makes our best returns outside the ASX 20. I think usually the ASX 20 is pretty well covered. The companies are well understood. They're pretty low growth. They trade at pretty good valuations. So as a general statement, that's not our number one hunting ground. I'd say that's even more the case today. Whether you talk about a CBA or a Wesfarmers and you sort of go down the list, a lot of the more defensive names are trading at very high multiples versus the broader market and versus history. And so we'd say that when we look at the index in Australia, it is going to be difficult for the index to go up a lot in the short to medium term. Over time, with earnings growth, we can see the index going up, but we don't see a lot of room for multiple re-rate to the upside from here. You know, if anything, stability or a bit of a drift to the downside.
Mm-hmm. And so in the smaller end, which it sounds like you're quite comfortable going into, what are the attributes of companies? You can tell me what companies you like, of course, but also what attributes do you know, is a necessity for your bottom-up stock picking here?
So for us, we're kind of indifferent to the size of the company. For us, it's all about how good is the valuation. So where the share's trading compared to our valuation, how much of a discount is there, and then how good a company it is. And so we look at three aspects in terms of quality. We look at management quality. We look at how good the company in the industry is. So we're trying to establish what the long-term growth outlook is, how sustainable the return on capital is and how high it is. And then finally, we look at the trends. And we're not talking about the charting trend, but the operational trend. Do we think life for the company is going to get better or worse over the next couple years than it is today? And so effectively, we attribute half of our thinking to the discount to valuation, half to the qualitative score. And that's the same, whether it's a big company or a small company. I would say that if there's one factor that we always sort of maybe overemphasize or really think a lot about is how good are the management team. Mm-hmm. And perhaps for small companies, that's even more important. It's not just about the CEO, it's about the board. Are they shareholder friendly? Senior management team, and then finally the culture in the organisation. I think a lot of people sort of focus a lot on the CEO and CFO that come to visit with investors on a regular basis, but they tend to tell a pretty good story. You really have to do a bit of digging. We speak to suppliers, customers, competitors. We try to get a holistic sense. Is there a good culture in the company? Is it like a winning culture? Are people keen to return to really make great returns for the shareholders, or they're sort of just going through the motions? And there's a relatively small subset of companies in Australia that we think have this outstanding management approach.
Mm. Do you mind sharing just one company you think has great management?
Maybe,
not that you're picking any favourites.
Sure. It is hard to... We typically have around 80 positions in the portfolio.
Oh, okay.
Something like 60 on the long side, something like 20 on the short side. In the last couple of weeks, you know, we've caught up with a lot of our management teams, and just yesterday I caught up with one, Paul Howes. He's the CEO of a company called Imdex. They do tools for exploration and now production drilling. He's been in and around the industry for a couple of decades, really understands it on an intimate, detailed basis, has a great approach to marketing, to R&D. He's really trying to think about where the industry is going in 3 or 5 years' time and being ahead of the curve. And so, you know, I'll point him out as an outstanding one. L1 recently held a client event, and we had the CEO of Santos presenting to us. He, again, is fantastic, really understands the industry deeply, is passionate about the business, has built some great new projects that are coming online over the next 1 or 2 years with a really challenging backdrop. So that'd be a couple names of excellent CEOs, but you know, again, as I said, it's about the culture throughout the organisation, not just the CEO.